Everyone at this point understands that the stock market can make you money. You'll likely, if you start watching videos, you'll likely hear these financial gurus talk about how you need to research a company before you invest in it. 100% true. That is 100% accurate. But how do you pick the companies that you need to do research on? What's up, YouTube? My name is Adam and this is Broke Man Finance. You've worked hard, you've saved some money up, and now you're ready to invest because you're smart enough to know that invested money can make you money. Today we're going to talk about how to invest that first $100 to $1,000. That way you can become addicted to the stock market just like the rest of us crazies. My very first investment amount was $250. I took $250 and I said, all right, I'm gonna pick some stocks, I'm gonna invest it. If I lose the money, then I'm gonna know that the stock market just isn't for me. But if I don't lose it and maybe I even make some money, then maybe I will consider investing a little more. I didn't know much about the stock market at the time, and I definitely didn't know what my circle of competence was, even though I have one just like you have one, and we're going to talk about that in just a minute because it is very, very important. It was hard for me at first to get my head wrapped around that I wasn't necessarily spending $250. I wasn't losing that money like I would if I was buying food or clothes or something to that effect. And maybe that's where you're at right now. But you still have that feeling of nervousness because you're spending $250, and to me, that's what I spent. Now, I'm not sure where you're at with it right now, but spending any amount of money makes you a little bit nervous because there's always a risk that it could disappear. After you see your money increase and it's not gone, you will start building some confidence that, okay, I can deal with this, I can do this, and you start to become more comfortable spending money on stocks. In fact, it becomes outright addictive. And lo and behold, there you are watching videos on YouTube, reading books, all about the stock market. And while you're here, go ahead and subscribe and please like the video so we can continue bringing more and more videos about the stock market and help you make good decisions along your investing journey. I felt that this video was important because I get asked all the time, hey, I have some money to invest, now what? On the opposite end, I've had a lot of people come up and say that they are down in the market because they invested in some random gas company because it was just a few bucks, and I'll ask them, what made you decide to invest in that specific company? What was it about that company that you liked? And the biggest answers, or the most common answers, are, well, it was only a few bucks and we all use gas. Hey, okay, whatever. This is where knowing what stocks to buy with that $100 to $1,000 to make your first investment, no matter where you're at. This is why it's going to be so important to do that, because I do not want you to lose money. But remember, I'm not a financial advisor. I can just give you advice on basically mistakes that I've made in the past, and hopefully you don't make those same mistakes. But step one, picking a broker. I suggest using Robinhood for new investors because it is very user-friendly and easy to understand. There are others to check out, and I've used them all, from M1, Webull, TD Ameritrade, Fidelity, etc. But it's all about what you feel comfortable using. It can be very overwhelming when charts and graphs start getting thrown at you as a new investor. Now, go to Robinhood and open up an account. That is going to be the first thing you do. You don't have to fund money into it right now until you're comfortable doing so. I'll even make it a little bit easier, and I will put a link in the description below. And actually, you'll get a free stock, I'll get a free stock. It's a win-win. But by opening up the account, you can start to kind of peruse the site a little bit and start getting more familiar with it. And you can even look up some companies that you've heard of or you may be familiar with, like an Apple or a Tesla. Start looking at those different companies' share prices. I'm going to lean on Warren Buffett, the old Oracle of Omaha, to help me out with step number 2. He calls this the circle of competence. You already have a circle of competence without even knowing it, because we need to invest in things that we know a little bit about, so that way we can gauge that quality. And once you become a little bit more comfortable and adapted to the market, and you can read a balance sheet and you understand price to earnings ratio, you understand market cap, and you understand valuations and beta and all these numbers, then maybe you can start looking at some more speculative stocks to invest in, something that's not as solidified and stable as some of these other companies. That's what keeps it exciting. But until then, let's stick with the script and invest in companies that we know about. In pure broke man finance fashion, I don't have a fancy graph animation. I couldn't even get my whiteboard to work right with me because of the lighting. So today we are going to do this on notebook paper. So the first circle we're going to talk about is, what am I passionate about? Maybe I'm passionate about cars. Maybe I'm passionate about building stuff. Maybe I'm passionate about cooking. Maybe I'm a fitness guru and I'm passionate about working out, health and fitness kind of thing, right? So then you start looking at the companies that's associated with each of those things that you're passionate about and that you know about. Like such as, okay, take working out. Maybe I'm a health nut and I have a closet full of Lululemon. You know Lululemon. You know if the quality of that product is going up, going down. If you see stores closing down, if you see more stores opening up, you can kind of gauge the level of that quality of that company because you use it, you know it. The second circle we're going to talk about is, where does your money go? What do you spend your money on? What kind of car do you drive? What kind of clothes do you wear? Where do you buy those clothes? Where do you go to when you travel? Is there a certain airline you use? Is there a certain rental company you use? Or are you just using Uber now whenever you go somewhere? Groceries, okay? What kind of, are there staples that you always buy, like Kraft Foods, I don't know, that you buy at the grocery store? What grocery store do you actually shop at? Do you do all your grocery shopping at Publix, at Walmart, at Ingles? But you can watch and see those things that you're spending money on because you know them so well. You know if they're getting better or worse. The last circle we're going to talk about, then we're going to bring them all together, is, where do I make my money? What industry am I in? Because that should make me somewhat of a subject matter expert in that field. For instance, let's say I'm a server at Chili's, which I was at one time. You take a look at Chili's, the restaurant. Can you invest in Chili's? Not directly, but you can invest in their parent company that actually owns Chili's and some other companies. They're Brinker, ticker symbol EAT. Then you look around inside Chili's, you look at the food ordering software, you look at the food manufacturers, you look at the kitchen equipment, you look at those ugly non-slip shoes. I know you got some because I had some too. You look in the parking lot and you see Blink charging stations starting to pop up in your parking lot because there's this EV craze going on and all these electric cars are now getting manufactured. And the list goes on and on, but the point is you can do this with any industry that you work in. Now lastly, the sweet spot is going to be right in the middle of those circles. That's where the magic happens. Something that touches on all three of those dynamics. Right there is going to be what you have to figure out though. I can't figure out that for you because I don't know exactly what industry you're in, I don't know what you're passionate about, and I don't know where you spend your money. That's something you have to figure out. So what I would do at this step, I would sit down, I would make my 3 circles, and I would start jotting out all those hobbies, the potential companies that I see at work, where I spend my money at. Go through your Amazon purchases or whatever and see really what you're spending your money on, because a lot of us are pretty consistent on spending our money on the same things day to day. Then you look at the companies that touch on all 3 of those, and that's where your research begins. But again, that is going to be something that you have to figure out for yourself. I'm just trying to push you into the right direction. The third step is actually going to be putting money into your account and buying some shares of stocks. You've done the research, you have your potential companies, you have the companies that you know about and are ready to invest in. There is always that level of risk that this company could just go belly up tomorrow and you lose everything. If you're buying some solidified companies, the chances of that actually happening is pretty low. For instance, if Coke was in your circle of competence because you buy it every day, you have for years, and you would be able to tell if they changed the recipe and would know if it just isn't as good as it used to be. I think we can all say that Coke isn't likely to go anywhere anytime soon, so you could probably bet that Coke is a safe investment. You see, Coke has a share price of around $50 and you can afford it. Now, do you use all your money to buy Coke or just use it to buy a share or two and diversify? If you choose to diversify and not put all your money into Coke or whatever you decide to, then I would make sure to put it in different sectors. Coke is a consumer staple. Therefore, your next stock that you may want to buy may be in technology, real estate, energy, etc. But you want to make sure that it stays within your circle of competence. If you still do not feel comfortable buying an individual stock, I get it. There is much more risk in individual stocks than there are in index funds or mutual funds. You may want to consider buying into an ETF, an exchange traded fund. You buy shares of them just like you do individual stocks, but they track certain indexes or sectors, and there are thousands of them out there. So you got to be careful because some are going to be more riskier than others. For instance, I like the ETF VOO, VOO. It's a Vanguard ETF, and it tracks the S&P 500. So when you buy a share of VOO, you're buying slices of 500 companies. So the chances of all 500 going belly up and just going to zero is pretty unlikely. And by all means, feel free to mix it up with an ETF and some individual stocks. That's what I do. I feel like it brings me a little bit of balance to my portfolio in terms of risk. That way, whenever I do want to put some money into a speculative stock, like some EV stocks, I feel a little more comfortable doing that because I have a portion of my money, a pretty good portion of my money in ETFs, and so there is that, which mitigates some of that overall risk that my entire portfolio is just not going to drop to zero anytime soon. But make sure you do your due diligence whenever you're looking at any of these companies, and we can always make another video about whenever you find a company to research, what are those numbers you want to look at, such as PE ratio and what the revenue is, what that balance sheet looks like, and all those financials. But that's all I have for today. I'd love to hear what your first company was whenever you decided to invest. Please comment in the comment section below. Again, remember to like the video, subscribe. It does nothing but help us improve the channel and bring you more and more content. But until next time, I hope you stay safe out there and take care.